All right, good people. How are you doing? In today's session, we are going to do a recap on how price was behaving throughout the week. But before we go in further, I just want to say that I'm proud of you guys, the level of dedication that you have been showing lately. Um Today it's a Saturday and it's 4 a.m. and you are all here with me going through these charts. This level of commitment will never go in vain. You are going to be very good at doing these things because the more hours that you are putting into these things, the more you are going to get better. Market is its own way of rewarding the people who show this level of commitment and dedication. So I'm really impressed, even by your results that you sent to me during the week. It's impressive, guys. I just commend you to continue doing the good work. So, let's get into today's business. So, as we predicted from our session on Sunday, we were bearish this week based on what we had market tapping into this fair value gap a few weeks ago, and our drawn liquidity was this low. So we wanted to see price coming into this level, which was drawn liquidity. So from this fair value gap to this low is our boundary. So as long as we are still within this boundary, we are bearish. No matter how the price is going to behave, we are not going to take any long positions because mostly it's definitely going to be liquidity that is being engineered. So this is our narrative, our context right there. The fair value gap and drawn liquidity, what to go short. So as long as we are within our boundary, we don't trade against it, right? So from our weekly time frame, we have a daily chart which was looking like this. Before these daily candlesticks, we had price pushing to the upside. It was definitely manipulation. I had someone who asked me a question on TikTok from the people who are part of our community on TikTok. I don't know if it's a he or she, but the person was saying, how do you use power of 3 in synthetic indices? If you are trading current pairs, futures, indices, it's very easy to use power of 3 because of sessions. But since we don't have session, the best way to use that approach of power of 3 is just, suppose in this case we want to see price going down, meaning we are bearish in our bias. So manipulation is going to be a short-term run to the upside. So whatever you see above previous candles highs or previous swing highs, short-term highs, or previous day highs and lows, mostly that's where manipulation is going to take place. Price will just go claiming those highs, which would be points of liquidity. Once it claims or raises that liquidity, then it starts pushing to the downside, which is exactly what price was doing right there. price was pushing to the downside, which was manipulation. So we wanted to see an indication that price was going to go down, and definitely in our case, our approach wanted to see a fair value gap of some sort here. Then we short the market. So from our daily chart, we have price expanding to the upside. Then we wanted to short it and see our, if we short price from these highs, definitely our first partials would take them from here. First TP above this this low, above this low, and ultimately above this low. But there is also another way of taking profits, like the perfect way of doing it, which I'm going to demonstrate at the end of this session. But for now, just keep in mind that we will take our first partials here, second partials, final TPs, but using the proper way of doing it, we'll take our profits below this pool of liquidity. Right, so we had price moving to the downside, hit our first TP right there, started to push to the upside. Let's look at a lower time frame for more details. So we have price pushing to the downside, hit our TP right there, started to push to the upside. Remember what I said earlier, as long as we are within our trading boundary, no matter how much you see, no matter what you see price doing, no matter how the price is behaving, one thing that you have to keep in mind is don't be induced to enter trades against your bias. Price started to push to the upside. Hypothetically speaking, suppose I was in a profit of 1,000. If price started to push to the upside, you see price around these levels, you would panic, but you don't have to panic, because we are sure and confident that the market is going to push to the downside. This is just market trying to gather momentum. I just want to give you a quick explanation. We all know guns. You might not, maybe you haven't used them before, or you haven't seen them in person. But from the general idea that we all have about guns is that you have to pull a trigger. And what is pulling a trigger doing? You pull the trigger backwards, then the bullet goes forward. So market, this is like this pullback. It's like a trigger that is trying to push market to the downside. So you don't have to have fear that price is going to come to your stop loss. If it does, maybe that day you take a loss or something, but stick to your trading plan. No matter what happens, stick to your model and plan of trading. Why? Because the more you try to chase price, you're going to make a lot of unnecessary trades, which are going to lead to poor money management, and eventually you're going to lose money. So we have price pushing to the upside right then. Then it started to push to the downside again. So if I had taken my partials here, which is exactly what I did, but I only closed one position from here, then the other three positions were running right. Price started to drop, as we can see. Usually I don't do swing trading, but if I'm busy, like the way I was busy this week, I prefer to take swing trades because I wouldn't have enough time to look at the charts. So this one I was swinging, but if I wasn't taking a swing trade, if I was scalping as usual, this was my first entry. My second entry was going to be this high. Why? Because as price was pushing to the downside, it left this fair value gap beautiful, this high, these highs, which was just liquidity being engineered. Price rated liquidity, tapped into the fair value gap, started to push to the downside. So my entry was definitely going to be there, or maybe on lower time frames I was going to get an entry from this leg right there. So price again comes to the downside, taking out these lows, started to push to the downside. You see price coming to the upside. If you are holding this trade for swing targets, you don't close the trade because it's breathing, right? So whenever you are analyzing the markets and you get to a point where you take a trade, I want you to understand that don't put yourself in a situation where you get pressure from other people posting screenshots on social media showing their profits and all. One of the things that most of them are not showing you is the point where price goes against them for a bit, which is actually normal, then it moves into profit. So don't be sold the idea of thinking that price moves in a straight line. No, that's not how price behaves. Price will always make pullbacks and expansions. So whenever you are in a trade and you see a pullback, if you are doing swing trading, don't close your trades. Be confident enough with your system, right? So after we had price making all these pullbacks, finally it hits this is the most significant place to take profits than this one. So we had price hitting the TP, this TP, mine was below here. Why? So the general idea is that you take two swing points inversely, like the inverted way of doing normal fib stretching. Like if you want to short, you start from here, then you expand it, joining these 2 points. But if you are looking for points to, or levels rather, to take your profits, you do it the opposite way, where you join this level to this level, then the expansion, the extension of the fib levels, we have minus 0. Minus 0.5, minus 0.5, minus 1, minus 1.5, 2. But it's always ideal to remember that the negative 0.5 is your first take profit if you are doing swing trading. This will be your first TP, then your final TP will be this one, this level that is marked as expansion. So what I'm trying to say is, before you enter a trade or when you are doing your market analysis, you need to realize something. Either you are going to scalp or you are going to do swing trading. If you are doing swing trading, your take profits are always near the short-term highs and lows that are formed during the expansion of that leg that you're trading in. And if you're doing swing trading, you need to aim for these levels. The reason why I had my final TP, this is actually my final TP. I closed all my positions when it hit my TP here, because this was actually a very safe area for me to exit. We don't know how the markets are going to behave from here. You might see price pushing to the upside a bit before it continues to push to the downside. Why am I confident to say that this is the final take profit? I'm going to explain it in a bit, but I want you to see something. One, we have price pushing to the downside, creating this intermediate term high, which is a protected high. So until we have price showing an indication that he wants to reverse based on some of the things that we have discussed below, you don't go long on this pair. Why? If we go to our weekly time frame, remember what I said. This is the most ideal order block, and we have this fair value gap with this fair value gap. And taking into consideration the concept of first line of defense and last line of defense, we don't know which one, because normally if you're on lower time frames, we will take trades the second the market hits this fair value gap, then our stop loss will be below here. But if we do that, we might blow our accounts, and it will be very painful. But to avoid that, since these are a lot of points for us to put our stop loss, what we are going to do, from either one of these two fair value gaps within this fair value gap, this order block, we want to see an indication of reversal, then we go long. I think we are going to be discussing this tomorrow in detail when we are going to do our weekly market predictions. But basically, this is the idea. Our expansion TP is around this level, which is more ideal considering the fact that we have this fair value gap within our order block, right? So this is it, guys. One of the most important things that I want to stress out is the fact that whenever you make a or see or define a trading boundary, whatever bias you have told yourself, you are not going to trade against your bias. As long as you are within your boundary, you don't trade against it. So this is it, guys, for today. I will see you tomorrow when we do our weekly predictions. Have a pleasant Saturday. Thank you.